Hello, everybody. Welcome back for another Cup of Joe. I am Joe Gallimore, Director of Investment Management with Argent Bridge Advisors. Stock indexes were effectively flat last week as things cooled off from the market rally that we've witnessed since mid-March. And with Q1 now behind us, we can see that 2022 has been a pretty turbulent year. We started off the year at record highs and have since seen two sharp declines followed by subsequent market rallies. And it may feel counterintuitive that the market is positive while there's a major world conflict going on. But since Russia invaded Ukraine, the S&P 500 is actually up a little over 5%. Now, what this tells us is that the major factors driving the market right now, at least here domestically, are still inflation, interest rates, and the economic disruptions related to COVID. Now, bond indexes and most bond strategies have struggled this year with the combination of that record high inflation and the looming rise in interest rates needed to tame that inflation. And I often sit here and try to think of analogies that help explain what's going on in the investment world. And one I often come back to is the weather. Now, what's going on in the bond market right now is a little like if you tried to change your wardrobe every day based on the 10-day forecast. Now, in this case, the weatherman is the Fed, and bond prices would be your wardrobe. Every day or so, weather conditions change, and thus changes the 10-day forecast. Well, this concept has led to a pretty bumpy ride for bonds this year. Now, until some uncertainty exits the equity markets and the Fed is further down its path of rate hikes in interest rates, bond markets are still going to remain very sensitive to the language and the outlook of the Fed on an almost meeting by meeting basis. In periods like this, we look to own flexible bond strategies that can maneuver and hopefully exploit this very dynamic market. Finally, to end on a high note, commodities, being an asset class that benefit from inflation, have continued their run of handsome performance. The Bloomberg Commodities Index posted a return of 25.5% in the first quarter. So us incorporating some commodities exposure in clients' portfolios has certainly had a buoy effect during this challenging year so far. So if you have questions about anything at all, please reach out to us because we always want to add clarity to your uncertainty. Have a great day.